It's been a busy week with central banks taking center stage, delivering their updated monetary guidance. And some of these decisions at these meetings, not as surprising as others. Joining me today to do a bit of a recap of the key central banks we've seen this week is Lacalle, who is an author and a professor of global economics. Danielle, welcome back once again. Thank you for joining me today here to have a look at what we've seen so far. And before we get into any specific on some of the banks that we've seen delivering their updated guidance, first, can you give me a few words to describe the key takeaways you have from this week?
Certainly. I think that what we have seen so far is the beginning of normalization from central banks. We've gone from a market that was too complacent probably and expecting that central banks would not do what they had announced that they would do and are doing. So in general, central banks taking action against inflation. Inflationary pressures are very strong, and those rate hikes so far, although modest, are certainly in the right direction in terms of normalizing policy after what was an absolutely immense liquidity injection in the year 2020 and 2021.
Great. Now, I was saying there, we've seen a lot of different policy deliveries this week. Let's start at the beginning of the spectrum, at the top of the spectrum. We're going to go obviously with the Federal Reserve. We saw those 75 basis points delivered from them on Wednesday. Now, market pricing was gearing towards 50 basis points at the end of last week, but then we saw that CPI data on Friday, surprising markets once again, higher than expected, showing that these price pressures are not easing anytime soon. And then we saw market pricing shifting more towards 75 basis point at the beginning of this week. Now, if we're looking at the reaction in the market, we've actually seen a bit of a drawback in the US dollar. Equities rallied a little bit actually on Wednesday after the meeting. Now, a lot of people are saying that was relief trading after the Federal Reserve said that they actually don't expect to see a recession anytime this year. They expect a bit of a soft landing to get inflation under control without hurting growth too much. What are your key takeaways? Why did the stock market react like that initially and then see that big pullback that we saw in Thursday's session?
I think that the market was expecting to a certain extent the 75 bips. It was widespread. Numerous investment banks and media outlets explained that it was very possible to see a 75 bip hike after the extremely elevated data published on inflation. And as well, what we saw was that the reaction from the market initially was a bounce. But it was a dangerous bounce. And it was a dangerous bounce because it came with weak volumes mostly, and because it gave a certain signal of bear market rally. And obviously, the day after, it went the other way around. The market started to price not just the rate hikes, but the risk of recession. And I think that when the Federal Reserve started talking about an environment in which growth expectations were trimmed to 1.7% for 2022 and also 1.7% for 23. That certainly made a lot of market participants very nervous, because on the one hand, you have the rate hikes that seem to be confirmed, and on the other hand, you have a very significant downgrade of growth expectations that gets people quite nervous, particularly the people that had invested aggressively in cyclical stocks, betting on an expansionary environment that seems to be at least trimmed significantly, both from the Federal Reserve estimates to as well the ECB and OECD estimates.
Okay, and how about the US dollar? Because, I mean, it seems to me like the market is maxed out on hawkishness and policy rates, at least pricing into the market. I mean, you can't get much more hawkish than this, right? So are we going to see potentially a short-term top in the US dollar? Is it going to start to subside to the downside here? What are we expecting the reaction here from dollar traders?
It's interesting that a lot of market participants perceive that this is sort of hawkish as can be policy, because it's actually quite dovish if you think about it. You look at the neutral rate that the Federal Reserve has mentioned, it remains significantly below inflation expectations, no? But even if we see it as a tightening and a certainly decisive tightening, I think that the problem of currencies is that it's not just the dollar, it's that the euro, the yen, and emerging market currencies have been implementing such aggressive policies in the past that the dollar strengthens not because the policy of the Federal Reserve is hawkish, but because of the weakening of the currencies that the dollar trades with. It's interesting for example, to see how in commodity trading currencies, commodity exporting currencies, have seen their currency weaken despite an incredible rise in the price of soya, in the price of copper, in the price of oil. So what we're seeing is the effects of currency debasement, and in my opinion as well, for many years what we have seen is a very aggressive carry trade. Market participants were long anything, equities, bonds, cryptocurrencies, private equity, short the dollar. So we're unwinding that massive trade, and that unwinding is probably far from over.
Great, and let's talk a little bit now about the Bank of England, because that's been also a very interesting bank to follow recently. Now, from their meeting yesterday, it seems like there's a bit of a clash in the way they acted and the way they were delivering their guidance, because taking a few points from their statement, they were saying that their inflation expected to hit 11% in October, and also the MPC saying they would act forcefully if signs of more persistent inflation were to emerge. I mean, there's a lot of debate out there that this is persistent inflation. This is as persistent as we're going to get, especially if themselves they are seeing inflation at 11% in October. What do you think was stopping them from going to 50 basis points and not 20? Sorry, from going to 50 basis points and staying at 25? Are they scared of banks passing on these higher rates to mortgages, to mortgage holders? Is that what's happening?
I think that central banks, the Bank of England certainly falls in this category, in many cases are stuck between a rock and a hard place. On the one hand, they have to combat inflationary pressures. And on the other hand, they have to be very vigilant that credit conditions remain stable or at least expansionary. And in the case of the Bank of England, this is extremely important because the UK economy is very, very, very sensitive to rate hikes, and the level of leverage of families is relatively high. So what the Bank of England is trying to do is to navigate a very difficult environment. On the one hand, as you say, they're publishing quite a surprising and surprisingly high inflation figure for October. And on the other hand, they seem to be hiking rates too slowly. I think that that's because they're equally concerned about inflation and credit conditions. But what at least we're seeing so far is that credit conditions remain broadly stable and that the rate hikes are certainly not impacting families and businesses as one would imagine.
Okay, and the key takeaway, or a lot of the feeling from especially the Fed meeting on Wednesday, was potentially that the Fed got the inflation mandate wrong. They waited too long to act upon inflation at the beginning of the year when they had the chance, and now they had to rush through 75 basis points rather than being able to do it gradually. Do you think we're going to see that from the Bank of England further down the line?
It's quite probable. It's quite probable, and also from the ECB. Central banks, when they wait too long and based on an analysis of inflation and and a view that it's going to be transitory, that inflation has largely transitory components, etc. And what they find afterwards is that is not the case. If they act too slowly, certainly then they have to accelerate, probably into a weakening of the economy. So the Bank of England is likely, if certainly the inflation of October reaches the levels of 11%, it is certainly going to accelerate the rate hikes. It is going to be a lot more hawkish. The ECB is likely to have to take more decisive action as inflation takes hold, and we see that core inflation in the Eurozone actually starts to get closer to headline inflation. And if they don't do it early, then they end up having to accelerate, probably at the worst possible time. No, so it's always a very difficult scenario for policymakers, because the problem started with the diagnosis. When policymakers mentioned that inflationary pressures came from the base effect, then said it was transitory, and then said it was due to the war. Of course, some of the inflationary pressures come from those factors, but not all of them. And then when they finally found out that the monetary side of inflation was a significant part of the rise in core inflation, then obviously they've had to accelerate, and that's probably what will happen, certainly to the ECB and to the Bank of England.
Okay, let's talk about now the reaction in the market, because we actually saw the pound strengthening after the Bank of England's delivery yesterday throughout the rest of the afternoon session. Now, a lot of analysts expecting the pound to actually weaken if we saw 25 basis points rather than 50. I think you can see this as two ways. You were mentioning earlier, it's a very difficult time for central banks. They're having to balance this soaring inflation and also concerns about stagnating growth. But I think on the one hand, traders can see the 25 basis points as the central bank making sure that the economy is robust enough to be able to support and withstand these rate hikes, and is taking it a bit more gradual and delivering them further down the line. There you could see that positivity being priced into the pound there. But on the other hand, you can also see it as, are they getting too lenient with inflation? You were saying there, once central banks realize that inflation is less transitory than they initially thought, they start to ramp up these rate hikes. A lot of people saying this should have been now. I mean, they are the ones saying inflation is going to hit 11% in October. They know it's going to be less transitory than what they initially thought a few months ago. Shouldn't they have started now? And I think it seems like markets have taken the first route and have decided that, you know, they're taking it cautious. They're trying to not hinder growth. Is that what you're seeing in the market? Is that why the pound has reacted to the upside?
Well, at least to a certain extent, I would agree. And there are different schools of thought, and obviously we can debate endlessly about this. But like with a bandage, my view is that rate hikes are better when they're implemented quickly. That the idea that gradual rate hikes is going to support growth better than a quick increase of rates that gives a view to the market that the central bank is truly committed to reducing inflation. I think that it doesn't work like that, because ultimately, even if the central bank raises rates only by 25 basis points instead of 50, the real economy is already ahead of that, and credit conditions are already reflecting not just the 50 basis points, but the subsequent rate hikes that are expected, because the real economy is pricing credit at the reality of inflation, not at what the central bank says, or at least entirely at what the central bank says. And because there is ample liquidity, commercial banks don't have a position in which they are going to generate a credit crunch because of a rate hike. So there are different schools of thought, and mine particularly is that it's better to do things quickly and decisively so that the market prices them, all of them, at the same time, and then moves on, knowing that the credit conditions are going to continue to be stable and strong, and knowing that the liquidity in the market is going to be elevated. So in my personal opinion, I think that the concerns about a recession start to happen because investors perceive that the central bank is being too slow about what they should do. And think about this. If the central bank saw the economy as strong, employment strong, consumption strong, and credit conditions stable, they would not have to doubt about the pace of rate hikes. So in the case of the Bank of England, I think that there's such a wide difference in consensus relative to the performance of the UK economy, and there's so many different aspects that people are discounting with different ranges of severity, that it's very difficult to gauge whether it would have been better to do one thing or the other. My opinion in general is that the Bank of England is quite trustworthy in terms of how they adapt to the real economy conditions, and that the one that is certainly perceived as going too slow is the European Central Bank, because the recovery of the European Eurozone economy was already slower in any case.
Okay, just to finish off, let's talk about quickly the others. You were mentioning there the European Central Bank. We've also seen the SNB, the Swiss National Bank, and also the Bank of Japan this morning. It's hard to put them all in the same bag because there's so many differences around them. But in terms of how they've delivered their policy in the past, they've been considered the most dovish, at least throughout the last few years. In terms of what we've seen this week and last, the ECB waiting, not delivering a rate hike at the moment, but Lagarde saying all the right things, that she's expecting rate hikes at the next meeting, and then further down the line, they're going to act more, sternly to combat inflation. The SNB taking everyone by surprise, giving us that 50 basis point hike that no one was expecting. And then the Bank of Japan this morning, pretty much unchanged, saying the same things they have been saying for the last few months. What are your key takeaways on these banks? Who's doing it right, if there is a right way to do it? And what do you expect to see from them in the next few meetings?
I believe that we can separate the pace of rate hikes from central banks in two categories. In one, you would have the European Central Bank, which is certainly the most dovish of them all, because Ms. Lagarde and the team basically perceive that the weakness of the Eurozone economy was already evident in the recovery, and that most of the inflationary pressures come from the impact of the war in Ukraine. Therefore, they're more concerned about the stability of credit conditions, and certainly about not hindering the possibilities of growth, and very worried about risk premia and sovereign bonds. So they're definitely the most dovish, followed by the BOJ. The Bank of Japan is trying to navigate a very difficult environment. They want, on the one hand, to recover the strength of the yen, but at the same time to continue with a relatively dovish policy, which ultimately drives the yen weaker. So they're trying to basically achieve two opposite things at the same time, and it's going to be a difficult one. In the case of Switzerland, I think it's very interesting, because if you think about it, the Swiss National Bank, what it's doing is to be probably the most detailed and the most exactly in line with a Taylor rule type of policy, that is, being very strict with what to do in terms of rate hikes according to the level of inflation in a country that has 2.8% inflation. So think about this. You have countries in which inflation is very elevated, and economies like the Eurozone where inflation is super elevated, and the central bank is going significantly slower than one would have expected. And in the case of Switzerland, the central bank is actually doing exactly what one would imagine that needs to be done at this moment. So very difficult moment for the Bank of Japan, I would say, if what they want to achieve is both yen strength relative to the dollar, and at the same time continuing to be extremely dovish relative to the purchases of bonds and the stimulus in the economy. And on the other hand, the strictest to the rule is probably the Swiss National Bank.
Well, Danielle, thank you very much for joining me once again. That was Danielle Lacalle, author and professor of global economics.